And the reason we're able to make it work is because of the variance and the difference between what the long-term rents would be and what the midterm rents would be.
Because there's a way to essentially drive up rent and target a very specific tenant that will come into the property.
Buying in 2025 is difficult. And Ryan and I did not buy any real estate in 2024.
Projects like this are more intriguing these days because a lot of times you'll see in the space of multifamily syndications, a lot of it plays into unless you're, directly booking people, going into the algorithms.
50,000 people will need 10,000 more housing units in the next decade.
I think you can take this game slow and steady and take the stepping stone approach and really going through the motions. Welcome back to the Wealth Juice podcast. As always, it's your boys, Ryan and Corey here with another episode for you. Today, we're going to talk about how we're buying real estate in 2025. For those who've been listening to us for a long time, have kind of seen the evolution of our investing strategies over the years. We've done long-term rentals, short-term rentals. We've bought a boutique hotel. We've done multifamily apartments and syndications. And this specific deal that we're going to go into today and our strategy kind of moving forward for 2025 is the strategy of midterm rentals. And there's a lot of people that are I should say this is becoming very popular in 2025 because there's a way to essentially drive up rent and target a very specific tenant that will come into the property. And I'll let Corey kind of dive into that. But I just want to let you know the property that we're going to discuss today is one that we recently got under contract. It's a 10-unit project up in Quichi, Vermont, which is 10 minutes from Dartmouth Health and Dartmouth College. So we are going to specifically target traveling nurses and grad students to stay in this property. Now, there's 6 units on one side of the street and then 4 units on the other side of the street. But one of the most intriguing things for this property for us is it's in a very high demand area with 0.3% vacancy rate. So there's a continuous need for housing and a lack thereof it. So for us, we thought this was a perfect opportunity. And the exciting part on top of that is it's in a B+/A area and up the road, like literally connected, I don't know, let's call it mile and a half away, is a country club that has access to a golf course, a ski hill, and a couple other amenities, pool, tennis, other things. And tenants will have access to this if they pay a slight fee. And then as owners of the property and our partners that come in with us, we also have access to this. So for our investors, we're planning golf trips to go up there to check things out, to kind of do like a semi-mastermind away and enjoy the project. So for us, projects like this are more intriguing these days because a lot of times you'll see in the space of multifamily syndications, it's typically a value add project where you have to go in, maybe you're buying, it's underperforming due to poor management, or it is just, there's bad tenants in there and it's an underperforming asset and you need to kind of revitalize the units to kick them up to market rate. And so for us, this is completely turnkey. We have to put probably 20 grand into the project overall, whereas the previous owner just revamped everything and essentially put on metal roofs, redid, quartz countertops, stainless steel, all of that in all the units. So for us, for it still to pencil out on a very conservative basis, being turnkey, something we're super excited about because you don't see this in the market that often. But I guess the underlying theme for this episode that we want to talk about is the benefits of midterm rentals and kind of how you can target specific tenants that are not on a long-term lease for a year, but typically like a 6-month stay.
Buying in 2020, by the way, that was great, right? Buying in 2025 is difficult. And Ryan and I did not buy any real estate in 2024. So just like, as a real estate investor and somebody who's constantly looking at the market, just think about that. Like, we didn't buy anything because it didn't pencil out for us, right? And now we're back on the prowl, if you will. And this 10-unit project, I think Ryan mentioned some of this, but it's a 6-unit on one side of the road, a 4-unit on the other side of the road. It's near restaurants, bars. So it's in this B+ class area that will attract A tenants. And I think the key here is talking about how often can you find a turnkey property in 2025? It's very rare. It's not something that's easy. And the reason we're able to make it work is because of the variance and the difference between what the long-term rents would be and what the midterm rents would be. And I'm going to go into some of these numbers here. The current rent on these properties for a 2-bed, 1-bath, some of the units are 2-bed, some of them are 1, is $2,200. Now you're in a decent area. You have access to all the amenities, as we mentioned, close to shopping and all that. But by targeting these traveling nurses, we go direct to the hospital system and they have stipends for $3,000 per month that is already earmarked for 2 beds. So by doing that, you're able to see this increase in all of the units of $800 a month in each of the units, thus making it very attractive for us and our investors to come in and change over. And the underwriting that we wrote is maybe to only change 6 of the 10 units to midterm, so that to be conservative in case, the demand is shrunk on the other 4 units. But to be honest with you, I think all 10 units are going to end up being the midterm rentals. So we have the steady demand from the healthcare working industry, really. There's a big tech scene around there. So we talked about the vacancy rate, like 0.3%, which is extremely, extremely low. Like there's such a demand for housing in this area. And I think to be able to think about this as your strategy for 2025 or something that you can use, you don't have to buy a 10 unit. You can go around hospitals, education institutions, metro cities, maybe in like the 15, 20, 30-minute suburbs from an area and see, hey, is this property at a 7% interest rate going to pencil out as a long-term rental? And the answer is oftentimes it's not. But if you can turn a $2,200 a month rent into $3,000 a month, you're creating your cash flow right there. It's a little bit heavier of a management strategy, right? You have to get cleaners in there maybe 30 days, 90 days, 6 months. But if you can furnish the properties and make them really nice and attractive, there are so many people that are looking to spend 3 months in a specific area. It doesn't even have to be traveling for work. This is we just interviewed Jesse Vasquez the other day, and check him out on social. He solely does midterm rentals. And I think this is a strategy that people should just be thinking about. So, this property, we're really, really excited about this. We're back on the prowl for 2025 buying, and our goal is to get 30 units this year. And this is, by the time you're listening to this, it'll probably be closed. We're under contract right now, but we're excited about it. And we're doing this project with our partner that we already have an 18 unit project in Manchester, New Hampshire, which is basically just across the border from Quichi, Vermont. That's like kind of on the borderline as we're talking about Dartmouth College and Dartmouth Health. It's about 15 to 20 minutes away. So we wanted to talk to you a little bit about this project and how we're able to execute the business plan.
Yeah, I think just to talk about this, I mentioned all the strategies that we've tried in the past. And for those of you listening and have been longtime listeners, we tried the Airbnb game for a while, short-term rentals. And not that we don't like it. Corey's got a great project down in Tampa that churns throughout the year. But for us, we kind of realized, hey, we don't want to consistently have to feel like we are the front desk person of a hotel. And there's so much that goes into short-term rentals that you don't see. And a lot of it plays into unless you're, directly booking people, going into the algorithms of whether it's booking.com, Airbnb, Vrbo, all these things, I guess the platforms kind of dictate a lot of your success. And even if you have a ton of 5-star reviews, you get hit with a couple really bad reviews for whatever reason, it'll drive you to the second, third, fourth page. And then it drives down, essentially the amount of people that are going to book your project and book your property. So I say that to say the reason we're kind of moving towards the midterm, it's more stable, right? There's lower turnover. Management costs compared to short-term rentals are much lower. And it's just a consistent dollar amount, right? You can at least figure out the stipend, the exact amount you can charge them for rent, and it's predictable. And so, the ups and downs of not only vacancy rates, but what you can charge people for short-term rentals, it's more stable for us. And for us, we kind of feel like there's fewer headaches and lower operating expenses compared to the seasonality of the short-term rentals. And having, specifically for us, we were up in kind of like a mountain. It's at the Pocono Mountains. That's where one of our projects was. And there's mud season and just a time of year where rates are really low and people aren't booking. And then you have to wait for the great times of year. And if sometimes those great times of year don't come, it just depends on the year. It depends. There's the economy also plays a lot into this too. So I personally, our risk tolerance has kind of changed over the years, and we like the tried, true, and stable. Now, if you want to drive more rent and make a little bit more dough, that's why we like the midterm rentals as opposed to the long-term rentals. And I think there's a way to pad your portfolio, buy, one property a year at least in a long-term rental, stable, but then mix in a couple midterms. And then when you get really comfortable with it, you can go for the short-term route. And maybe you want to make that higher chunk of cash flow, because I know a lot of people want to get in. And I'm really speaking to people that are maybe buying their first or next rental property and they're just getting into the game. We always get questioned like, hey, should I start with the Airbnb? Should I start with the long-term rental? What do you think about midterm? Because there's so many strategies out there. I think you can take this game slow and steady and take the stepping stone approach, and really going through the motions, putting the training wheels on with a long-term rental proved tried and true for us. And that's where we learned the game, right? You don't need to buy 4, 5, 10 properties right off the rip, or something that you think is going to cash flow $5,000 a month. Buying real estate and going through the motions and running your business for the first time is going to teach you the systems that you need to build that $20,000 a month cash flow portfolio. So I just bring that up here to say, like, this is it's a really strong method, and I think you're going to see it become even more popular as we get into 25, 26. You can get ahead of the game by looking at midterm rentals. I think if you're, another thing I wanted to mention was Corey mentioned by hospitals, which is great for traveling nurses, and then definitely look for college towns, right? Like, how close can you get to university? We kind of hit two birds with one stone in this one, where we can, it can be for the grad students, but it also can be for the traveling nurses. So we'll have kind of a mixed breed in the properties, but also don't forget about army bases. I love that approach. I think there's all over the states, there's specific pockets and markets where you can look at army bases, and people, I don't know the exact stipend, but there is an amount that people get they have to pay for their housing, right? Because they're on the base. So just think about that. That's another avenue where you can potentially charge a little bit more. You're providing great housing, and not to say I don't want people to think, hey, we're just doing this to raise the rents and soak up as much cash as we can. No, you're providing a service to a specific class of people and a specific target avatar tenant for yourself, right? So if you can work smarter, you don't have to work harder in a lot of aspects like this too. So for us, it's just a lot of this, the flexible leasing is awesome. I really like that. I wouldn't do like the 30-day stay, right? Because then you're going to have the continual churn of people. But if you can get a 6-month stay, it allows you to prep for the next person coming in and just kind of have this, clean turnover rate over time. But what I will say is, for us, the reason Corey kind of mentioned, we didn't buy anything in 2024. Deals weren't penciling out, and we were looking for bigger projects. We weren't doing the small onesie twosies. We're stacking that cash to try to get into bigger deals. And I think what you'll find with us moving forward is we're going to be partnering up with a lot of people and trying to bring in a small investor group to take down bigger deals with us, because we want to get into larger projects like this. They're more fruitful for everybody, but it also, just the long-term play on these, I think, something that you buy for potentially $2 million, it's easier for it to climb to 3 million than that $200,000 project to climb to $1 million, right? So, in a lot of these, sometimes you'll have people that come in on strictly just a capital basis, and they're a limited partner, which we talk about. Then you have Corey and I, who are general partners, where we do a bunch of the deal analysis, the management of the property manager, the underwriting, the investor relations. There's so many different things you can do in projects like this. So what I will say is, what we're going to be doing as we seek out new deals in the future, we are going to be putting together a list of people that we want to take down deals with. We already have a couple people, the 18 unit project that we did up in Vermont. All the people that came into that deal, they're coming into the 10 unit deal because it's worked, it's tried and true. And we have a business model and a business plan that we stick to with the same people. And it's easy to kind of carry out the business plan again after project after project. But what's really exciting for us, I would say, is you are only as good as your team. And we have an incredible team up there of like-minded individuals that we have our end game is the same. And we have long-term views of getting projects that are very similar to this, because we know what we each want in the future. And so I say that to say, when you're building out your business, you're looking for the midterm appeal. You can invest in state, you can invest out of state, but you're only going to be as good as your team. So take that into consideration when you are looking at a property manager and you're looking at your strategy. Who's going to be managing this? What kind of team can you put together? And there's so many different ways to build out your team. I won't go into the complete how-to. We've done other episodes on that. But just think about, real estate is a people-based business and a relationship-based business. So if you want to get into a specific strategy and you say, hey, midterm rentals sound great. Okay, now go search on YouTube or go search on podcasts, midterm rentals, and listen to all the podcasts you can on this strategy. And then go DM that person that is doing that specific strategy, right? And then you're going to meet people. It's going to kind of spiderweb effect. You'll get the standard operating procedures of how they run their business. You can then start reaching out to agents in the specific market that you want to go to, and really start building the boots on the ground team to be able to take down the deals like this. And so it can be a little daunting when you're first starting out. That's why we like to get around the right people that are doing it and that have already seen a major level of success, because then we get pulled up to their level and you soak up the knowledge that they have accumulated over the last 10 years. And it doesn't have to take you 10 years to learn that, right? They can give you the spark notes. So just a couple anecdotes there. I think this episode was really just to give you a state of the union, where we're at, how we're going to be buying real estate in the future. I will say, click the link in the show notes. We have a form to fill out if you guys are looking to get into real estate. Maybe you have a rental property of your own, maybe you have a small portfolio, and you're at that point you could have no real estate as well, but you're at the point where you're a high income earner, you have some cash on the sidelines, and you want to put it to work, and you're looking to come passively into real estate deals or potentially partner up. We are looking for a very specific type of person and investor to come into future deals with us. So you have to be obviously like-minded like us, but values, integrity, there's a lot to it. So for starters, you can fill out the form in our show notes, and then we'll book a call to see if we're the right fit to work together. And then when future deals come up, we can have you on our list, hop on a call, and see if that deal is a specific fit for your portfolio and your long-term view. But super exciting for us. That's kind of the next evolution of this whole game. And we're going to be taking down larger deals. Super excited about it. Long-term rentals, midterm rentals, those are going to be the tried and true kind of bulk of our portfolio.
Yeah, great points, right? I think just to give a little bit more detail, and so people that are looking for the midterm rentals, and kind of to wrap up the episode, but more specifically this deal and why it works. So it's estimated that there's a market up there in this Quichi, Vermont area, or just like the surrounding area, that 50,000 people will need 10,000 more housing units in the next decade. So think about when we talk about vacancy rate and how this applies, like 50,000 people need 10,000 units. And to build that in this area through permitting, historical districts and all that, it's very difficult. So if you have to find where your competitive advantage comes in, and people are moving into this area looking for housing, and there's a shortage, which, what does that do? It drives up the demand. It drives up the rent prices. So that's why we're able to charge a little bit more. There's also just another piece of information about this property specifically. There's storage unit space that's on the property that's not being utilized. So this can make or break a deal that you're looking at. We have people within our community that we coach to help buy their first or next rental property that are looking at a property, and there might be a detached garage, right? And that detached garage is, maybe just has a bunch of stuff in it. You can use that as a storage unit and rent it out $200, $300, $400, $500 a month. And that is part of the process that we're going through on this property. So I think the creative way to get into real estate now is the business plan, not just the asset itself. It's like, what are you going to do with this property? And that's, for us, how we're able to turn a project that would minimally cash flow with long-term rentals, and then you furnish the units, and all of a sudden you're able to increase the rents by 30-40%. And that makes something exciting to people. And also there's other perks of this property being on being part of a country club too, right? So the tenants and the owners can go use the racket sports, golf courses, ski hill, and just the clubhouse. So we're super excited about this. We're back on the prowl for 2025. And I think that this 10 unit is a great project of just being creative, in the high inflationary, high interest rate environment. We're still making deals work. We're not just buying deals just to buy deals. We're buying the right ones to pencil out with partners that we've already established relationships with. And you guys can do this too. And that's why I want to just do a quick episode to talk about what we're doing. Happy to answer any questions, by the way, about this project specifically. If you want to shoot us a DM on Instagram at WealthJuiceOfficial. Also, Rye mentioned, fill out the link. We'd love to chat with people who are interested in potentially maybe creating a relationship and investing in projects in the future. That's what we're all about here. So, Rye, did you think I missed anything here?
I think you covered it. If you guys have any questions, feel free to reach out, and we'll see you next week.